Welcome to Trade Pro. I want to talk about the only time it's okay to trade with chart patterns, trend lines, and things of subjective nature. And that is when you already have other things in play that are signaling the same thing as your subjective ideas. You need to have an objective system that is like a scientific procedure that anyone could follow. You need to have a written approach that is already telling you, hey, it's more likely that the market is going up. And then when you bring in those other subjective approaches, you can add those on top, and that is all right. Okay, and that might make your strategy even better. But what I want you to start with is an objective approach. I think that's extremely important, especially for beginners who haven't fully developed their psychology when it comes to their trading. So I just wanted to take the opportunity to talk about this because I see a good sort of example on the chart right here, euro dollar. I'm on the 30-minute time frame, and I just noticed that there is a classic ascending triangle here. It's in a pretty strong uptrend for quite some time now, and there's also some hidden bullish divergence forming with the RSI here. So we're getting a higher low, and RSI is already at a lower low compared to these previous lows. We don't know that this is actually going to play out because there's no confirmations yet, but I'm just kind of trying to make an example of how you can have objective and combine it with subjective, as a chart pattern can be pretty subjective because everyone draws them differently. Trend lines can be very subjective because everyone draws them differently. Price action can be objective, can be subjective, depending on what you're doing, but you know what I'm saying. If it's slightly subjective, you do want to combine it with other things that are objective just to really reinforce what you're seeing on the charts. So that is the only time that I think it's acceptable to use subjective approaches, and where it may even be a good idea. So right now we're just kind of looking at this ascending triangle, which of course everyone knows typically would signal an increase in price in the near future. So likely a move up, but just the ascending triangle alone would not be a good indication of that, compared to if you have a few other factors where you already have a system that's telling you that the price is going to go up. Then you have also the ascending triangle. So it's just another layer to add in, but I want you to focus on the objective means first, then talk about those more subjective things afterwards. So I'm not a hater of the subjective type of trading, but I do like to teach the more objective approach on my channel because I believe it's the best way for especially newbies who haven't fully developed their trading psychology yet. Okay, so there it is. I'm not hating on price action or trend lines or chart patterns, but I just believe you need to combine them with other things in order to have proper success, especially for beginners. All right, so that's pretty much all I wanted to say, and don't take this video as me saying that you should combine hidden divergence with ascending triangles and that's your winning ticket to the lottery. No, no, no. I'm just using this as an example because I noticed a good opportunity to combine indicators with the ascending triangle, and I guess you could pop up, you know, a MACD on here or something, and and see kind of, oh, if we get a cross up and it's breaking and we have an ascending triangle and we had the hidden divergence, you know, you can combine a bunch of different things to indicate a actual successful continuation of a uptrend. But yeah, just kind of rambling on here. I didn't have anything planned. I just saw this and thought I'd turn on the screen recording and talk about it. But anyway, thanks for listening. If you did, have a nice night.